Hello people, you are welcome once again to the Business and Trading Hub. Last week, in my last video, I talked about 10 smart money concepts. I talked about 10 smart money concepts you need to know to become a pro Forex trader. So, among these 10 smart money concepts, I actually want to explain two among those concepts in more details, because why I want to explain them in more details is because these two concepts among the 10 actually create some form of confusion among traders. So it's somehow several traders actually find this concept difficult, or rather confusing. So that is why I want to explain it once and for all, so that you would actually learn it better. I've actually made a previous video on it, on the two concepts I want to talk about in detail among the 10 smart money concepts that I talked about in my previous video. So what are those two concepts? These two concepts I want to talk about are the break of structure, and the change of character. Okay, the break of structure and the change of character. You need to know the difference. Several traders take these two concepts as the same. They appear to be the same, but they are not actually the same. Okay, they are not the same. So you need to know the difference between break of structure and change of character if you really want to up your trading game, if you want to up your trading game to a higher level. So you need to know the difference, their occurrences. Okay, you need to know their occurrences and when they occur on your chart, and the implications. Okay, when you see them, the implication of that. So you need to know these things. So it's very, very vital. So that is what I'll be doing justice to these two concepts in this video today. So let us get into it. Or if I get into, I want to ask that you please kindly subscribe to this channel if you're yet to do so, and also give their videos a thumbs up if you find this video useful. If you find our videos useful, kindly give it a thumbs up so that YouTube will recommend it to more upcoming traders, so that they can become profitable in the business of forex trading. So first concept we want to talk about is the break of structure. Okay, we actually denote it by BOS. So break of structure is actually a term that is used to describe a situation in which a currency pair or a financial instrument breaks out of a well-defined price range. Okay, so when a currency pair breaks out, this is break. Okay, it's actually break of structure. So as the name implies, when a currency pair breaks out of a well-defined price pattern, breaks out of a well-defined price range. Okay, so a currency pair is moving in a particular price range, and now it breaks out. It now breaks out of the price range. So that is break of structure. I'm going to show you in the chart, so just in a while. So let's just know it that. So when currency pair breaks out of a well-defined price range, it is called the break of structure. Now for change of character actually occurs when there is a sudden change in behavior or direction of a currency pair. A sudden change in behavior or direction of a currency pair's price action. Okay, that is change of character. So I'm going to be explaining it in more details in just a while. All right, so this break of structure and change of character are not the same. So you need to know that they are not the same. There is a difference between these two concepts. So there is a difference between there's actually a difference. There's a difference between the break of structure and the change of character. Break of structure, so there's a difference. The major difference between these two is that break of structure, BOS, signifies trend continuation. Okay, why the change of character signifies a change in trend. Okay, so the break of structure, if a break of structure occurs, it means that the trend is the market, the currency pair trend is going to continue in the same direction. If the market was going in a bullish form, is going to, when a break of structure occur, is going to continue in a bullish form. All right, or a bearish, when it is a bearish trend, it's going to continue in a bearish trend. But when change of character occurs, it means that if the market is in a bullish phase, it's going to change to a bearish phase. And if the market is in a bearish phase, it's going to change to a bullish phase. So let me explain in detail what break of structure, how it occurs in your chart. So break of structure, if the market is moving, the market does not move in a straight line. Okay, the market does not move in a straight line. Just as you can see, this is not a straight line. 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 Okay, the market moves in a zigzag manner. Okay, the market moves in this way, just like this. This is how the market moves. The market can either be in a bullish phase, bearish phase, or in a consolidation phase. All right, so but the market is never moving in this form. There's always a retracement and a continuation. The market does what we call a retracement. The market does retracement and continuation. Okay, so the market does not move in a straight line. So now for a bullish, we have two types of break of structure. The break of structure is classified into the bullish break of structure and the bearish break of structure. I'm going to show you this in a while as well. So now let us move towards, let me show you the bullish change of break of structure. You have the market moving like this, okay, creating higher highs and higher low. So the market moves in this form, and I told you the market does continuation and retracement. Retracement is just a pullback. Okay, the market moves in this form, does a pullback. This is continuation, pullback. The market now breaks. This is the price range. Okay, this is the price range at this particular point in time the market has made. This is the highest point the market has have bought, and this is the lowest price the market has bought. So this is actually the price range. Now the market does a retracement and now breaks above the previous high. Okay, when that break in the previous high occurs, we now have what is called the break of structure, because the market has broken out of this price range. So now the market will still do a retracement. When the market does a retracement, you have this range again. You have this range. So the market also does a retracement, just like a resting phase. The market rests, a breathe in, breathe out. All right, this is like a breathe out. Okay, breathe out. This is breathe in. Okay, retracement is like a breathe in, while the continuation is like a breathe out. So the market does a retracement, a breathe in, and now goes again to break the high that was created. This is called break of structure again, but in this case called a bullish break of structure. Now the market does another retracement back, and further, this is a range in that form, now breaks the range again, having another break of structure. So this is what we call, this is the bullish break of structure. Why is it bullish? Bullish in the sense that because the break of structure results in a buy. Okay, because in a buy the market breaks into a new high. All right, a new high, a new buy. All right, so this is a bullish break of structure. I hope this is clear. This is a bullish break of structure. Now let me also, beside it, show you the bearish break of structure. For a bearish break of structure, you have the market sell down. All right, as it has sold down, it retraces or rest. As it retraces, this is the high, this is the high, and this is the low. So the market breaks, sells down, cause giving us a bearish break of structure. The market also does some form of rest phase, okay, which is also a retracement. You have another price range. The market further breaks that price range in a sell, giving us a break of structure number 2, bearish break of structure number 2. Now the market, you now have another price range. Now the market retraces again, buys again in the form of a retracement, and now breaks that structure again. The previous low breaks the previous low, giving us another break of structure. All right, so the market creates a higher high and higher low in this form, which is a bullish trend. But in the bearish trend, the market forms a higher high, lower high and lower low. Okay, so each time the market breaks the previous low, we have the previous low. The market breaks the previous low, we have a bearish break of structure. Should the market retrace again, and now breaks this low, it is another break of structure number 4. This is number 1. This is number 2. This is number 3. This is number 4. So this is a bearish break of structure. All right. So you have seen the difference between the bullish and the bearish. This is a bullish break of structure. It results in higher highs and higher low, while the bearish break of structure results in lower low and lower high. Okay. This is a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. All right, but this is a bullish phase, bullish break of structure occurring, okay, resulting in higher highs and higher lows in a bullish phase. But for a bearish break of structure, you have higher lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and each break to the downside creates a new break of structure. Do you understand? So this is actually it. This is the difference. Okay, so for a break of structure, as I told you, shows trend continuation. Okay, break of structure shows the market in this bullish phase. When a break of structure occurs, it shows that the market is continuing in its bullish phase. But in a bearish phase, when a break of structure occurs, it shows that the market is continuing in its bearish phase. So break of structure shows trend continuation. Okay, so break of structure shows trend continuation. That is the clear understanding of the break of structure. I'm going to show you on the chart. I'm going to depict this on the chart for you right now. All right, so as you can see in this place, this is the market here creates the market here creates higher high and higher low. Now breaks structure right here, okay, and retraces back, giving another range, breaks structure again, okay, and retraces back, breaks structure again. So this is some form of bullish break of structure, break of structure. All right, let me show you the bearish break of structure. Yeah, let's look for a suitable example. Like here now, it's not always a textbook form, so it could be complex, but if you understand what you are doing, you should be able to identify that. So you see the market creates a new low, retraces back. All right, this is the first leg, retraces back, breaks this structure, comes down, retraces again, breaks this structure. All right, breaks this structure down, second bearish break of structure. All right, retraces right here, breaks this structure right here again, and sell down. Okay, retraces, breaks this structure. All right, so you have BOS number 1, BOS 2, BOS 3, and BOS 4. So this is a bearish break of structure. All right, that is a bearish break of structure. So you should go on your chart and be able to identify the bullish and the bearish break of structure. Now let us go into the change of character. All right, let us go into the change of character. As I told you, change of character signifies, a change of character actually does two things. Number one, change of character does two things. Okay, it does two things. Okay, number one, the change of character signifies a change in trend. Okay, it signifies a change in trend from either a bullish to bullish, either a bullish to bearish, or a bearish to bullish. Okay, that is what change of character does. Now the second thing change of character does is that a change of character joins two trends. Okay, if you have, it joins a bullish trend and a bearish trend, or joins a bullish trend with a joins a bearish trend to a bullish trend. You're going to see that. Okay, this is another way of saying the number one. Okay, because when there is a change from one to another, is like joining both. But I'm going to show you clearly how this occur. So let me show you how this works. Okay, now a change of character. This is what a change of character does. Now you have the market in a bullish phase. Okay, break of structure, retracement, break of structure, retracement, break of structure. That's bullish break of structure, as I just taught you right now. Retracement and a break of structure as well. Okay, now this is the market is moving in a bullish phase, right? Creating higher highs and higher lows. These are break of structure to the upside. Break of structure number 1, number 2, number 3, number 4. Now, when you want to have a change of character, there is a break. There is the market. Now you see that no previous low was broken in the bullish phase. Now, when there's a low broken, like you see now, no low was broken here. No low was broken. All right. The market is continuing. The retracement does not break a previous low. Each retracement does not break a previous low. But when a retracement breaks a previous low, we have what is called the change of character. All right. This singular action signifies that this bullish trend is about to change from bullish to bearish. So when this retracement breaks a low, that is change of character that has just occurred. And that when that occurs, you now have the market reverse. Okay, retraces again, break structure. You now have what you have. You now have a bearish change of character. A bearish break of structure. The market retraces again, breaks again, the low, giving you your break of structure number 2. Break of structure number 2, retraces again, breaks again, break of structure, retraces, breaks, and break gives you another break of structure. What can you see here? You can see that this is a bullish phase, while this is a bearish trend, and this was joined together by a change of character right here. Change of character. All right, so this here you have a change of character from bullish to what? Bearish. Okay, this is a change of character from the bullish phase to a bearish phase. Now I want to show you a change of character from bearish phase to a bullish phase. Let me show you. Now for a bearish phase to bullish phase, you have the market creating bearish break of structure, again bearish break of structure, okay, bearish break of structure. Now you can see that none of these highs, each retracement does not take out the previous high. Each retracement does not take out the previous high. But when a previous high is taken out in a bearish phase, all right, the market, this retracement now takes out the previous high, we have what is called the change of character, bullish change of character here. Okay, this is a bullish change of character. So when that occurs, it shows you is a signal that the market trend is about to actually change. So now you begin to have your break of structure to the upside, which is your bullish break of structure. You continue having that to the upside. All right, each retracement gives you a break of structure, retracement and a break of structure. So this is actually a change of character from bearish to bullish. Okay, this is a change of character from bearish phase to the bullish phase. All right, so this is a change of character from bearish phase to the bullish phase. So one of the most important uses of break of structure and change of character is one of the most important significance, significance of break of structure and change of character is that it helps you to gain it helps you to refine your entries. It helps in refining your entries. It helps in entries actually. Okay, it helps you. It serves as a confirmation to entries. When I mean entry, I mean confirmation to entry confirmation to trade. So when a smart money trader tells you that I'm looking at a particular setup, and when I get a confirmation, I'm going to get into the trade. The smart money trader is actually looking for change of character and return to order block. All right, he's looking at change of character and return to order block. What do I mean? It means that you have, for instance, you have this setup, and maybe you want to get into a trade right here for a retracement, and the market does something like this and comes to this place. You step down. You are supposed to step down to, this could be your H1 time frame, okay, H1 time frame, or H4 time frame, or 30 minutes time frame. You might want to step down to your 5 minutes time frame, or your 1 minute time frame, or your seconds time frame, or okay, 30 seconds or whatever, or just a lower time frame, and you look for some form of, when the market comes, you look for, in this place you are having like this mini lower low and lower high. So you are looking for your change of character right here, a change of character right here that will signify to you that it is time to get into the trade if you want to buy. All right. So when you're looking at for a change of character, you're looking for something like this, as I told you, a break of character, and now you're looking for your entry that will signify you. I've done a separate video on this. Actually, I've done a separate video on entries. So I'm going to put that video in the description box of this video. The link to that video, I'm going to put it. So that video will explain to you in details. Okay, what that video is going to do for you is that it's going to explain to you in details how to use break of structure, change of character, and return to order block in order to get entry confirmations and to refine your entries. Now, when I say refining your entry, I mean in order to help you to get a higher risk to reward ratio. Now you see someone tell you that he got a trade of 1:5 risk to reward ratio or 1:10 risk to reward ratio. This is only possible. This high risk to reward ratio is only possible from the knowledge of entry confirmation and refining of entry. So I'm going to link that video, very important video. You need to view that video. It will help you to know how to refine your entries by means of change of character, break of structure, and return to order block. It's not as difficult as you might think, or as other traders paint it. It's difficult actually, but I have simplified it for you. So you need to view that video. It's going to explain to you how to use break of structure, change of character, and return to order block to get entry confirmations and to also refine your entries for a higher probability of success and higher risk to reward ratio trades. All right. So I hope this video is very clear and concise. All right. So I want to ask, please kindly subscribe to this channel if you're yet to do so, because more useful contents are coming your way. I've got years of experience in Forex trading and I'm sharing it for you free of charge in this YouTube channel. I also have a free Telegram channel. I have a free Telegram channel. There I share setups. Okay, I share daily setups. I share daily chart setups for free. Okay, in that channel you have free setups which you can trade at your own discretion. For example, today I've shared this setup on GBP USD. Okay, we are monitoring this setup on GBP USD. Okay, so here now we are looking for some form of entry confirmations right here. We're actually looking for some form of entry confirmations right here before we can actually get into this trade. So the market has bought up to this point, and now we have got some form of a break of structure right here. So the market has actually retraced back and come to this supply zone. So we are still waiting. We are actually still waiting. I'm still waiting for some of confirmation right here. And when I get my confirmation, I'm going to get into this trade. And we are expecting the market to sell down to this point. At least it should sell down to this point. All right. So these are the things I've shared this setup in our free Telegram channel. And I shared 3 setups in our free Telegram channel. 3 setups. In fact, we have actually entered USD card. I shared a setup on GBP USD, and I also shared setup on Euro USD, and also shared another setup on USD card. And on USD card, we got into USD card today, and possibly tomorrow we might be entering these two when these 2 setups are matured. All right, that is so we've traded this USD card, and we have currently broken even on this trade. We are in profit on USD card. All right, so you need to get into that YouTube. You need to get into that Telegram channel. The link to that Telegram channel is in the description box of this video or the profile section of this YouTube channel. All right. So I also offer a free mentorship program, not free actually, subsidized mentorship program, and it's a one-on-one mentorship. One-on-one mentorship program on A to Z of Forex trading. Okay, I take you from the A to Z, from the basics to the advanced stage of forex trading. All right, I take you by the hand until you become a experienced, a profitable forex trader. I do not do collective mentorship. I do one-on-one mentorship so that I can actually train you at your own pace, because different individuals have different learning rates and learning curve. That is why I prefer giving you the attention you deserve in order to become a profitable and a trained, experienced forex trader. So till I come your way next time, I wish you the very best in your forex trading career. Do have a wonderful day ahead. Bye.